And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, everyone, to my fine futures friends and family. It's time for the market prep. Wednesday, March the 29th. My name is John Hoagland. As always, thank you for trusting me with your time. Our focus is always on context, risk management, and patience in trading. This morning, we do have some smaller economic data come out. 6 o'clock this morning. Mortgage rates came out a little bit lower than they were last week. 6.48 last week, 6.45% this week. We do have a Fed, talking Fed speaking today. Barr is speaking again today at 9 a.m. Central, at the same time as pending home sales comes out. And then, of course, 9:30, the EIA Petroleum Status Report is due out. We see stocks a little chipper here this morning to the upside. We're seeing some movement to the upside as some of our recent banking fears subside. We've also had two big chip makers, one in Germany and one here in the U.S., raise their guidance for the coming quarter. Infineon, that's the one in Germany, and Micron also is planning on cutting some jobs. Crude pricing remains firm as economic fears fade and inventories fall. The API, a surprise with a 6 million barrel draw in crude stockpiles yesterday. The EIA is still expectation for a little change in crude inventories here in the U.S. today. We'll have to wait till 9:30 to find that out. VIX this morning down 2.7%, back down below 2019.43. It was at 20.80 yesterday. Dollar index up slightly, 102.64, was 102.45 yesterday, 102.45 yesterday. And the yield on the 10-year up again slightly this morning, 3.58%, where it was 3.54% yesterday. Good morning, everyone. I'm still here with my boring background. That is going to be changing soon. But as always, I do ask that you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome here on the market prep and the market reflection, everything we do here. And subscribe to our YouTube channel so you get notified when we do go live. We do have group coaching today at 12:30 Central. I just put the link to register in. Please join us and bring your questions. And we've also got Make Hogue Money, the afternoon session today at 2 p.m. Central. We'll be looking forward to seeing you there as well. So there's the two links. First link, group coaching. Second link, Make Hogue Money. You can always watch Make Hogue Money on our YouTube channel, or you can join us for the Zoom meeting, which is a little easier to vote and a little easier to talk because it's in real time, where YouTube has about a 10 second, maybe a 15-second delay. It's great to see everybody. We got a new winner here this morning. Ed Fanger's first one in the room. Ed, you win the prize this morning. Shaw, good morning. John Pakulis, having trouble finding the weekly kickoff levels and the weekly kickoff email. We have changed the time that it is being sent out. It's being sent out about 7:30 on Monday morning. On mine, I get it. It says it comes from Top Step Weekly Kickoff, which is, I think, our support team sending email. And like Fred says, the title from it was adding on to trades, good or bad. So there may be something with your computer, with your browser company, whatever it is. I would check the spam, check all the different kind of envelopes that your email can come in. You've got your inbox, you've got your spam, you've got promotions, you've got social media, all those. If you're on Google, they have all these different kind of files that they put all your emails in. Check those. If you don't find it there, then contact our support team and let them know that you opted out of our emails. Perhaps something like that has happened. They can find that out for you and get back in there. We don't want you to miss out on those, John, of course. Urban Cowboy, good morning. Les, the rooster, crowing this morning. George. Lacey is saying good morning to everybody as well. Jason, good morning. Timothy. Fred, thank you for helping out with John's question there. Bill, yes, I received mine on Monday at 7:31, the exact same time that Fred did, and it does have a different title on it. So take a look. Yeah, if you don't find it, John, contact our excellent support team. Maybe they can help you find that. Good morning, Fred. Good morning, John. Good morning, my brother Rick. Always good to see you. Love you. Hope you and Tom had a nice lunch yesterday without me. You saw some good pictures. Rusty Golfer, my spirit animal, is here. Hegel Matters. Good morning, Anissa. Jason. Vince, good morning. Will R. Robert. Demonde. Travis, good morning. Joe, good morning. Pete, good morning. Bebon. Good morning, Tim. Rooster, the boring background helps me keep my chicken brain focused. Yeah, it's kind of bare back there. It's gonna change it here soon. Don, here again. Good to see you. Always a pleasure. Jay, and my pleasure, John Pakulis. Shy T, good morning. Scott, good morning. Good sunny afternoon. Must be over in the across the pond. And we're looking forward to, with GDP tomorrow, I'm trying to keep my expectations for larger profit targets in check. I think we've seen some pretty range-bound days, some kind of choppy mornings, and I think we can expect more of that through tomorrow morning. And then we don't know what's going to happen tomorrow morning. It could be a big nothing burger. It could be a big deal. We're going to trade what we see. We'll be preparing everybody for after the release tomorrow, which is at 7:30 Central for the GDP number, to what we're seeing, to what the context of the market is looking like, and the market is telling us what it's trying to do. It's up to us to be able to decipher and make good decisions in and around that. Alejandro, good morning. You are not last but not least. JT, good morning. I tell Bluebell I said good morning this morning. And let's get down to business, shall we? Trying to think of anything else I wanted to mention. No, we got, again, group coaching today, 12:30, Make Hogue Money, 2 o'clock, and a brief reflection after Make Hogue Money. So we'll look forward to seeing everybody throughout the day. I'm going to start here with the daily in the S&Ps. What are we looking at? What are we expecting? What's the context of the market? What are these markets trying to tell us? Well, upside structure remains to a degree more range bound right now than anything as far as continuing upside. Maybe some upside digestion. Look at how low the volume has gotten. Even in the New York Stock Exchange yesterday, there was 3.9 billion. It's really come off in both futures and in stocks. So we're just waiting for this information. We've got a little bit of a boost today on some, the fact that we haven't heard anything bad about the banking sector and a couple of good chip makers. That's got everybody in a cheery mood this morning, and I love to see that, love to hear that. But again, volume has really slowed. Open interest, we lost 6,100 yesterday. People are positioning, people are hedging, people are preparing for themselves for whatever may happen tomorrow. And again, nobody knows, and anything can happen. ACH, that's one of our acronyms here. So we do have to keep an open mind when we think about these things. We get too much into a bias, that mind closes, and it makes it difficult for us to recognize when things are changing, to see when things are changing. So we always, try and keep an open mind. So we're expecting, again, hedging remaining through the GDP tomorrow. GDP is largely expected to remain at 2.7% quarter over quarter, and this is for quarter 4 from last year. So we'll see if there's any big changes in that. Let's take a look at the 30 and see if the market is telling us anything there, which to a degree it is. Now, I've moved this trend line to include this low. So when we look at this, it's a pretty solid, decent move to the upside. But right here is the area of balance that I'm really kind of focusing on. And that's where my focus is going to be for any larger, longer time frame trades, is on the extremes of this balance. Well, overnight, we've got some pretty stiff overnight longs. We've got a decent gap to the upside. And all of these overnight longs are shorter time frame, weaker hands traders. They're pea shooters. They're not the big players. So while everybody is all happy and cheery and the market is moving higher, we have to be aware of the overnight inventory risk. We're opening with a gap, so if we can't close the gap relatively early, we're looking for opportunities to buy weakness. Even a gap close to the high of the range from yesterday's regular trading hours session could be viewed as supportive. But if I'm looking for longs, knowing all of these overnight inventory, all of these overnight shorter time frame, weaker hands traders are long, I'm going to be patient and see if I can't get some sort of an adjustment of that inventory, which could put me in a better trade location if I were looking for longs. You can sometimes catch that move in the opposite direction when our direct competitors, the other pea shooters out there that traded all night to the long side, decide to get out. So I'll be watching for something like that, but overall, because we're opening with a gap, the rules are if we can't close that gap relatively early, we're looking for opportunities for continuation. Now we're in short time frame control. Short time frame control means some of our shorter time frame levels are going to be more likely to be respected. Yesterday, the market opened here. It traded up to almost the point of control from yesterday or from the day before. It turned around and traded to value high from Friday. So this is what we mean when we're in short time frame control. Look at Monday. Traded to close the gap from Friday. We traded near the high from Thursday. Short time frame levels respected. So that's really what I'm going to be looking for today. And if I don't see anything that really, gets me excited about the opportunity, I may not do anything because we know what we've got coming out tomorrow. Just contemplating what we're doing here. So here is the profiles, including the overnight. So we've got some distributions continuing to kind of build in the overnight volume, highest at the high. That's a good thing for continuation to the upside if the longer time frame decides to get involved. Oh, that's not what I'm looking for. Where is that? Where is that? Where is that? Here we go. No, this one. So here's regular trading hour sessions only. It's the normal variation, neutral trading day, IB high in the extreme of the initial balance, excess on the high, low excess on the low. We are rejecting that low excess. But these weak lows, 2 days in a row here, are probably indicative of shorter time frame traders trying to push price lower. They remain targets for if the market turns around, but it's the shorter time frame that's created these weak lows, and we seem to be, of course, rejecting those lows now. We're trading up at 40.37. I was reading a couple of articles of some economic geniuses, if there are such a thing, that say the S&Ps are primed to get up to 4,200. Well, we'll see about that. It will happen eventually. We just don't know when. So, prominent points of control, overnight inventory long. I'm going to try and be patient, look and see if I'm looking for longs to see if I can't find better trade location when those overnight longs capitulate, when they reconcile those positions. They're going to have to sell. All right. Here's crude oil. We are seeing, I think, disappointing continuation to the upside here. We've got volume lower. We lost open interest yesterday against an important inflection level. So the auction process, instead of gaining volume and open interest, is losing volume and open interest. Now that can change if the longer time frame decides to get involved, and the weekly kickoff level is usually one of those levels where I'm looking for that to happen. Okay, so the weekly kickoff is a critical level that has not excited traders here just yet. But the space between weekly kickoff high here and this trend line might play out to be somewhat important for us. This was our coiling. We broke out, we continued, we're coming back to that level. Might be an interesting spot for an execution if we do get there today. Where is that level? Well, if we were to look at these fibs, yesterday the 50% was relatively close to an area of importance. Today the 618, 74, 65, looks like it's going to line up relatively nicely with that trend line. Unrelated studies giving the same opportunity might be an interesting spot for us. So I'll be watching. Maybe it could be one of my first crude trades in quite a long time, but I don't know. I'm going to see what it looks like when price gets there. If price gets there. But with no new business, with losing open interest, losing volume, I'm expecting somewhat of a change in market state. Now, the market state we're looking at here is in short time frame upside structure. A change in market state doesn't mean a reversal. It could mean just that the market is ready to turn into some sort of balance here, looking for new information. And we know that this market is looking for information today from the EIA. And take a look at the 30. So we just opened with a gap, overnight inventory long, opening with a gap, unable to close the gap. We're looking for opportunities to buy weakness here. Be cautious with this, though. Losing volume, losing open interest as the market continues to push higher is a warning sign that the auction process is not doing that well. I'm kind of looking at it as maybe a C. A C is the grade that I'm giving this upside auction. Here's the TPO chart. So we still, this was a late spike. We accepted price above the late spike. We have excess at the low. We have low excess at the high. It's not a weak high. And now we've opened with a gap. So we're still, I think, in upside structure, but it's going to take new business for us to continue this move to the upside from where I'm sitting. Yesterday was a normal variation trading day, IB extreme low, continuation to the upside, but points of control remain centrally located in the body of the profile, which makes me believe that this is a kind of a neutral trading day. Of course, volume is overlapping to higher as far as volume value. TPO value was outright higher. I don't want to fight this upside move, but I'm a little cautious about looking for longs. Take a look at the NASDAQ now. So NASDAQ range bound. The S&Ps are still fooling around down here where it relates to these levels. NASDAQ has really been holding up much better. Well, is that ringing true? Low volume, losing open interest. The auction process has gone into balance. It's ranging, it's chopping, it's consolidating, it's flip-flopping, and that is an industry term. So this market is in balance, range-bound. Volume and open interest have slowed, losing 700 estimated in open interest yesterday. So what are we looking at? Today I'm expecting hedging and positioning prior to the GDP. Of course, if something happens, somebody says something, that can go out the window in a millisecond. So keep your eyes, of course, peeled on what's going on in the world, and so usually we're going to see a change in the market before we're going to find out what that is. So make sure you always protect yourself with a stop. Always wear a stop. Take a look at the 30. So overnight inventory, again, long. Coming into the open, it looks like we're still seeing buyers coming in here. But again, these are shorter time frame, weaker hands traders. What are they looking for? What are they looking for? They're looking for longer time frame traders to come in and continue to buy this market to perpetuate the continuation of profits in their longs. If it doesn't happen, we might see a pullback, an inventory adjustment, which could give us better trade locations if we are looking for longs, and can also provide a good downside move if we time it right. So without the benefit of new buying coming in, at some point this market is going to adjust inventory, take out a lot of those weaker hand longs, and push price lower to give us better trade location. Here's the TPO chart. Here's the overnight. Here's yesterday. Initial balance. Was the high. IB high. Excess. Lower excess. But we're rejecting that. The market rejected it last night. It closed pretty well. Settling in the NASDAQ was 12,732. 732, right up here, right at the high. Well, right at the high of the selling tail here. The low of the selling tail, I should say. Got a weak low in the overnight. But again, if we open with a gap and can't close the gap, we're looking for opportunities to buy. Pagel TPO is this chart. Time price opportunity or market profile. It's a different way to organize the information. And remind me here at the end, I'll send you a link to some basic information that we've put together in the form of webinars on the basics of market profile or TPO charts. How does that sound? All right, here's a gold. Coiling, range bound, coiling, losing 2,300 in open interest yesterday. And if you'll notice, I am on the June contract. The June contract now officially has higher volume. A lot of folks have been forced to move into the June contract, which was pretty illiquid, and I'm not real happy about that. But now we know that the liquidity is in the June contract. Go right past May into the June contract. Don't forget, you're going to see May has a lot of holes in it because it's a very illiquid market. It's a very illiquid contract month. Nobody trades it, so make sure you go all the way past it to June. So, range-bound upside digestion, does it look like here? Yeah, maybe a little bit. Overnight and volume have slowed, of course, before the GDP. Volume has not necessarily showing that it has slowed because of rollover, but we did lose 2,300 in open interest yesterday. Here's the 30-minute chart. We got a late spike here, and we are opening and did open, rejecting the late spike. Here's the range from yesterday. Settlement was all the way up here at 1990.40. For those of you that don't know the late spike, like Pagel, this gives us an opportunity to give some reference or nuance to the next trading day. Now, the market profile organizes the information a little bit differently, but each of these TPOs, these little bars here, are the range for a 30-minute period. And yesterday, gold closed on the high, making a new high, and did not allow traders enough time to show acceptance or rejection at this level. So the market closed up here, 1990.40, right up here. So when we look at this profile, we see where the market spent most of its time in the thick part of the profile and where it didn't. This late spike, the range extension at the end of the day, that did not have time to show acceptance in regular trading hours becomes an important level. The base of this late spike in the gold is 1971.80. Well, we've opened below it. Opening below the base of a late spike indicates rejection of higher pricing, which would have us looking for shorts in the session today until there's an acceptance back above this level. All right. So we opened in range and value, which tells me, well, maybe we should stay a little bit patient. Maybe we'll get an opportunity up near the base of the late spike for an execution. That would be nice. Here is our euro. So short time frame move to the upside has fallen into balance. Like so many of these markets, we are in balance, and it's understandable. People are hedging and positioning for what may happen tomorrow. Volume. Look at volume. It's just dried up. Open interest dried up as well. We added 300 contracts yesterday. So a lot of folks are sitting on the sidelines in this euro, at least for now. We're going to see a change when we break out of this range. The short time frame upside structure, I'm giving it a C- for upside continuation. That's a pretty low grade, unless, of course, you're me in high school. Overnight inventory is going to be long, or at least it was. Flat to long. We open with a gap. Well, that's closed. Are we rejecting range from yesterday? Quite possibly. So gap rules are out. Now gap close might actually end up being support, which does sometimes happen. Hello, JD Royalty. Here's the TPO chart. Normal variation trading day. IB high, IB extreme at the high of the day. P-shaped would indicate short covering, but when we add open interest, maybe there's some short covering there. Not a very high excess low, weak low, low excess high. Trading or opening with the gap. It's all going to be about acceptance of value from yesterday. If we accept value, then there's a probability that the market could trade all the way to the other extreme of value at some point during this session today. We are not so far seeing signs of acceptance inside value from yesterday. So the value area special situation play is not on here just yet. We may see it. We used to say we needed 2 30-minute bars to close back inside value to provide us that opportunity. And my question is really, with the small value area range here, is it even worth it? Is it even worth it? Here's the 10-year. Volatile range bound activity with an upside tint. Volume low. Open interest adding 6,100. I'm looking at as somewhat inert. We did end up having almost 3 lines of contact with this trend line. We're now below it. Is that going to move us lower? Take a look at the 30. Open with a gap, unable to close the gap, driving away from the range from yesterday. We do have some visuals down below with which to look for. Point of control, last week low, little gap. There's kind of a lot of weaker structure down below. Here's the 30-minute or the TPO chart. Excess, no excess. No gap close. Continuation to the downside. But there's a lot of no excess highs or low excess highs and lows in this market. It has just a big tendency. Big tendency to leave those. All right, let's take a quick look at natural gas now. I don't trade this. I just find it fascinating. We added 1,600 in open interest on a kind of a secondary acceptance below weekly kickoff low. How do we gauge acceptance? Through time, volume, momentum, participation. Volume, I think, has actually been pretty good. We've been adding open interest as this market has been continuing to hold this downside structure. This auction to the downside is presenting as relatively strong. At this point, I'm ready to give it a B+. And I don't give out B+ as much. Here's the 30-minute chart. Adding 1,600. Volume to the downside. We got a late spike here as well, ladies and gentlemen. Take a look. Here's our late spike. We closed the day 2.147 right about here. So we got the late spike. We've opened below the late spike. We have not even been able to check to close the gap or to base of the late spike, which is 2.168, 2.168. And right now we've got a gap. The only thing I'm thinking about doing, if I were, is looking for opportunities to limit risk on shorts in this market right now. And now that I've said that, the market is likely to make a big liar out of me. Big liar. Which I don't want to be. I am not a liar. I am not a crook. We know what we've got ahead of us. We know what we've got coming tomorrow. The GDP number. Be patient today. If things don't go well right away, don't push things. A little U.S. country wisdom says, if you find yourself in a hole, stop digging. Makes sense. So get out there and profit today. Let's take our deep breath. Let's stay humble, grateful, creative, and centered in our trading today. Be kind to yourself and others. Say a prayer for peace. I look forward to seeing everybody for group coaching at 12:30 Central. Have a great morning. Trade well. Be patient. Stay cool, calm, collected. Be like Fonzie. And what's Fonzie? Fonzie's cool. Trade well, everyone.